I just found a brand new strategy that I myself personally use all the time. It involves, drumroll please,
fair value gaps.
If you don't know what fair value gaps are, well, you're in for a treat. If you do know what fair value gaps are, well, you're even luckier because I'm about to show you an amazing strategy using them. And most of the trades have a risk to reward ratio like this. And the crazy thing is, a good majority of the time, it succeeds.
What? Why have I not heard about this before?
Well, you know me. I like to get straight to the point with these videos. Let's see how this strategy works. First off, we're trading Euro USD. This trading strategy will work in all markets, including stocks, crypto, forex, whatever you're trading. Also, as a quick side note, I just hit 100,000 subscribers recently, and I want to say from the bottom of my heart, thank you. Seriously, I love you guys. As a way to say thanks, Hankertrade has agreed to help host a forex trading competition with me, which means
there's a prize pool, baby.
I'm hosting a trading competition where the top 2 people with the highest percentage gain on their account after 2 weeks of trading will receive $1,000 cash each. So we are giving away a total of $2,000 to you guys. The only requirements is that you need to deposit a minimum of $100 on Hankertrade, follow both me and Hankertrade on Instagram, and of course get first or second place. That's it. If you do all of those things, you get a free $1,000.
It's free real estate.
Hell, you could even use this strategy that I'm about to share with you to help you win it. Hankertrade is a great broker and I've been using them for a long time. You can get up to 500x leverage, they have extremely low spreads starting at 0.0 pips, yes you heard me correctly, low commissions, negative balance protection, and they'll match 100% of whatever you deposit. So yeah, they're pretty awesome. If you're interested in joining the Forex trading competition, I'll leave the sign up link in my description. It'll start once this video gets released. So yeah, enter now.
Go, go, go!
It'll end in 2 weeks. You can also check out my Discord where I'll be updating a live leaderboard of the competition. Good luck. Thanks again for 100k subscribers. Back to the strategy. So the very first step for the strategy is finding a key support or resistance depending on if you want to go long or short. For this example, we want to do a short trade. So we need to find a key resistance. You can do this by finding a recent swing high or by going on a higher time frame like the 1 hour and finding a key resistance there. So here price just made a recent swing high. It also had a pretty strong resistance on the 1 hour time frame, so we mark a line on our chart to let us know there's a strong resistance right here. The next step to make this strategy a high probability setup is we want a fake out. A fake out is simply when price breaks your resistance or support and ends up being a false breakout and starts heading the opposite direction. The reason why we want a fake out is this. There are going to be people entering long positions for this break of this recent high. So you know what they're going to do? Set stop losses down in this area. So if price does end up doing a false breakout, once price comes down, it'll hit all their stop losses, adding fuel to the fire, giving price momentum to keep heading downwards, which is exactly what we want when going short. So we have a resistance, price starts coming back up towards it, but doesn't quite break it. So it's not considered a breakout. Price rejects, then tries to break the resistance again. This time it does end up breaking the resistance, just barely though. Then it starts falling. This is the false breakout we are looking for.
Oh, this is exactly what I was looking for.
So that is step 2 completed. The next thing we're looking for is price to confirm it's heading downwards. How we confirm this is we want price to make 2 lower lows like this. If price ends up making 2 lower lows, we can confirm that there's a high probability of price to continue to head lower, considering this is the start of what's considered a downtrend. So here, price had a false breakout, price makes a low, goes up a little bit, then makes another low. Look closely to what's happening. Price came to this resistance area, and not only that, but it also did a false breakout, which is an extremely bearish sign. Then on top of that, we made 2 lower lows. All of these signs are extreme indicators of price wanting to move downwards.
It's extreme.
Now, you may be asking,
Okay, price made 2 lower lows, but when do I enter?
we are going to get our optimal entry from a fair value gap. A fair value gap is just when price makes a huge move in one direction and doesn't give the buyers or sellers enough time to counteract the movement, creating an imbalance in the market. Price will naturally want to come back to this area to test it again. You can get this area by getting the big movement and going from the candle wick before the move and the candle wick after the move, and this is the fair value gap area. Now what's cool is my private indicator has an option to where you can enable fair value gaps, and it'll automatically showcase all the fair value gaps on the chart, so you don't have to do any of the work and it does it all for you. It will also color code the fair value gaps to tell you if they are bullish or bearish. So that's what all these rectangles are on my chart, fair value gaps. If you're interested in the indicator, I'll leave a link in the description so you can go check it out and use it for yourself. So price did a false breakout, then made 2 lower lows, and you can also see on this second low, it made a bearish fair value gap, which is exactly what we're looking for. This will be your entry signal. Sometimes price will create multiple fair value gaps on the second low. If you want to short and it does this, always just aim for the entry of the highest fair value gap, as this will give you the best entry. You will have cases where price doesn't make it there and you will miss out on the trade, but you'll have a better risk to reward ratio by trading off the highest fair value gap. Anyways, so we have our fair value gap target. What I like to do is use the tool on TradingView, the Gann box. Place it anywhere on your chart, click on it, and then go to the settings. Pause the video and make sure your settings match mine. Once you have the correct settings, display the Gann box exactly on the ends of the fair value gap. This will draw a line exactly in the middle of the fair value gap. This is our entry point. Price will often go to this 50% mark and reject here. So we wait for price to hit this line. Price ends up coming back up and hitting the fair value gap just as we expected. This is where we enter our trade. You can set your stop loss at the recent swing high, or if you want to be a little more risky, you can set it above the original resistance. I usually set it at the recent swing high. You'll get stopped out a little more, but the risk to reward ratio is way better. In the end, it's up to you. Then you're going to set your take profit at the low of the whole move. What makes this strategy so successful is the risk to reward ratio. With most of these styles of trades, you're going to have huge room for gains and little room for losses. So basically, you only need 1 out of every 4 trades to be successful in order to make money with this strategy. Oftentimes when price has a huge spike up like this and starts consolidating at the top, price will usually come down and mirror what the move did while it was going up. So it'll hesitate usually at the same exact spots it did while going up. The end goal is where the move started, which is where we will set our take profit. I also recommend to increase the win rate of the strategy to take profit at key hesitation levels. So here during the move up, price hesitated here and here. These are potential areas to sell a percentage of your position to get guaranteed profits rather than wait for price to make it all the way down here. As a quick hint, another way to find potential take profits is by going on a higher time frame and looking for bullish fair value gaps and use the Gann box tool again. These could also be good areas to take profit. It's really important to incorporate risk management when dealing with strategies like this. So we have our stop loss set up, our take profit set up, and we entered into a short trade. Price starts heading downwards right after hitting the fair value gap, just like we expected. Then it hits our first take profit area and starts hesitating, also just like we expected. So we sell 25% of our position right here. Then we let price and its momentum do the rest of its magic. It starts heading downwards some more and hits our second take profit and starts hesitating again at our take profit area. So we sell another 25% of our position. This way we are guaranteeing these profits. Then finally, price ends up hitting our final take profit and we exit the trade, making an absolute killing off this one single trade. That's the thing with this strategy. You get these massive wins, and because of all the precautions we take before entering the trade, it makes an extremely high probability setup. If you wanted to do a long trade, just do the complete opposite of everything we just did. Again, if you want to check out the indicator to help show fair value gaps, go to tradinglab.ai. And if you want a chance to use this strategy in a trading competition and win a free $1,000, sign up for it in the description. It starts right now. Good luck.